Hi, Chris Duff over at Serious Land Capital Vacant Land Funding Partner. Today wanted to go over some additional insights on subdivides. I know that's a topic we've commented on and provided lessons on routinely here. There's always new individual insights with particular deals. I wanted to focus on one that was kind of borderline major subdivide. It might still have, I think would still fall within a minor subdivide case. It was just, they were trying to do a lot of child parcels. This was a, almost 200-acre piece in, a rural area with a decent amount of terrain too. Definitely not fully flat, and you're going to run into some potential buildability issues. There's kind of creek running through, some potential adverse selection, and adverse selection is, what I always tend to mention routinely is that, when you carve up parent parcels into various child parcels, it's very rare that all child parcels are going to be created equal. So the ones that are more superior versus inferior, you have to account for potentially longer time on market for the riskier child parcels and potentially lower price per acre. So then your blended price per acre for the total project to move all child parcels within the subdivide may end up being lower than what you initially suppose. Based on what the anticipated exits are for the superior child parcels, which, most people tend to bias themselves toward and focus on. So this particular project, again, was, roughly 200 acres, supposedly was already surveyed and platted into 37 child parcels. I did not get that report. But interestingly, it was a live deal that the seller did not seem to include any materials that it was already subdivided and platted. So that was kind of an interesting element to me. But we're just taking that at face value. So anytime we see some of these that are probably 10 plus child parcels, especially of similar sizings. In this case, it was between like 3 to 8 acre child parcels was going to be the goal. There's always also going to have to be a anticipated gravel road installed for the property to fit all of the various child parcels in. And like I mentioned, there was probably a third of them were going to run into, some adverse selection risk with trickier terrain and closer to like where creeks are and so forth. Maybe even questionable septic installation issues or maybe needing alternative systems. So, can depress the exit price from possible buyers as well. And, when this deal was sent over to us, it was indicated, hey, broker, of course, broker is saying, yep, I can sell all 37 of these, no problem. There was another subdivision that seemed to be in a more inferior spot that they moved most of their parcels within like 2 months or so. But there were no links for any of those child parcels that had been sold in these other subdivisions. And the only CMA that was provided was for other like large acreage, 100 plus acre properties that were intended to be sold as single acreage. Plus they had significant improvements on it. So I'm like, this doesn't line up. Okay, the broker is saying one thing, they can sell all these child parcels, and then the only CMA they put together is for large acreage. Like that was not, that was a bit of a red flag for me. And then just looking at Redfin for wherever these other child parcels were, I just wasn't able to locate them. I only had the dates sold back to, lagging 12 months, which generally we're not going to consider. Parcels beyond 12 months, except in unique circumstances, there's really kind of a lack of comps, but that wasn't the case in this market. There was a lot of movement. A lot of other child parcels being sold, some inferior, some like roughly the same. And pretty much all of them were basically selling for the same price per acre that the parent tract was supposedly under contract for. So that was not lining up. And yes, the parent track did have some advantageous views for a good chunk, maybe 2/3 of the properties. But, to expect a X increase on price per acre just from views alone, not doing any other value add and so forth, and not being waterfront property, like waterfront tends to maybe drive premiums like that, if not even more. But, for views alone, it's rare that you're going to find that much of an increase for the underlying properties. And there were some other child parcels on that had sold on the market that might not have had exact same views, but decent enough. Plus, they even had improved terrain. So I was just very skeptical about. I'm not really seeing the evidence for. Okay, this is going to be a 7-figure plus purchase, anticipated trying to 2x the total exit in sub 12 months, meaning we're going to have to undercut the market and move 30 plus properties that are all roughly the same acreage. You're going to need a lot of buyers, even in a relatively active market, and combat adverse selection. I just wasn't seeing it. So, I was following up, trying to ask those additional questions. Can you provide me those other child parcels that seem to have sold for much more? Because that was not apparent to me based on my review there. So, very skeptical about the possible outcome for that project. So just wanted to share this again because, again, we get sent Subdivide opportunities routinely, and, they are very tricky to figure out how to do well. And not that many people have significant experience in them. Oftentimes they're not that cheap. So you might look at a lot of them, but actually closing and moving on them and moving on them successfully with a real track record. You can show, okay, bought at X price and this was the total Y return, and managing multiple child parcels, 10 plus. Like, there's not that many people with that level of experience in the industry that they can kind of point to that. So, just to kind of indicate, like, hey, if you're going to send stuff like this over, or even if you're just, looking at potentially exploring subdivides on your own, just wanted to rehash again some of these warning signs. And, especially when you're dealing again with 10 plus child parcels of similar acreage, like, you have to be even that much more careful, because, if you're even slightly off, you can just be sitting on inventory for ages, and you have to also account for separate closing costs for each of these parcels. Maybe you get some repeat buyers or people buying multiple child parcels at once. You can reduce some child parcels, or you can reduce some closing costs in and of itself. But title costs, even for pretty simple deals, I mean, it's rarely below $1,500 one-sided transaction. So if you're doing like 30 plus parcels, and like in this case, you're looking at probably 50, almost 60 grand that might just be devoted to closing costs outside of commission on the back end just to move the parcels. So you have to account for that. Plus, the road wasn't included as far as costs there too, so I wasn't even sure what the purchase price per acre was either. So again, bottom line here, the more info and research you can provide, the better. And really, really understanding the market. Like, sometimes I see people send over these super lengthy diligence reports, utilities, and underlying kind of macroeconomy of the locality, or how close it is to certain cities, and interstates coming by. Like, none of that is as important as the underlying comps and the market. And some people, they'll shove in, here's 3 or 4 comps that all got sold over like the last 18 months. Like, that should be the primary. That is what I'm looking at as really the number one factor, especially when it comes to a subdivide opportunity here. So spend more time on that. Like, that's kind of the 80-20 rule when it comes to subdivides. Like, really figure out your child parcel market, and especially accounting for characteristics. The remainder, sure, yeah, new casinos, etc., coming to the area, new attractions, fine. I've never seen that really drive deals forward, especially on an exit outcome like that is into the realm of speculative investing. Some of those larger projects can get delayed, or just get canceled, or don't actually have an impact on the buyer economy that that you might expect there. We are not spec buyers. We are data-driven buyers in relation to the trailing 12 months, especially. So just keep that in mind. That is the way to succeed in an overall difficult economy. With that, seriousland.capital for any of your funding needs, Land Daily Diligence Facebook group for zero cost review of your land deals, going live in about 30 minutes here, and landpricer.ai beta invites are going out later today. Most simple and accurate way to price land. Subscribe and share. Thanks for tuning in. Talk to you next time. Bye.